Started a little bit late, a little bit of technical issues, besides the fact that I have had a bit of oral surgery this past weekend and feeling better now. But man, up until a little while ago, I didn't know that was going to go online. So let's talk about some concerns that I have with regard to an individual chart, and that is the XLY. And the XLY is the Consumer Discretionary Select Spider Fund. And you could see that this is a monthly chart. And I have overlaid here the S&P 500 in blue, yet the XLY, the consumer discretionary names, have yet to break out and validate the breakout on the S&P 500. That's concerning because this is a consumer-driven economy, and if the consumer is feeling all well and good and confident, well, then they should be buying, and it should be reflected on the XLY, but it is not. So I'm going to be watching this chart as we move into the coming week, because we have a lot of economic data coming out this week related to the consumer. You have retail sales coming out on Friday of this coming week. Let's drill down. Weekly view of the XLY. You could see that the S&P 500 is vastly outperforming the XLY on a monthly and weekly basis. And in fact, when you take a look at the XLY and you want to annotate this and identify the fact that on the Stokes anyway, weekly basis, we are rolling over. We are putting in lower highs. We haven't broken down, so it's not too late for this sector to join the party. But again, we'll be watching for a breakout, and we'll also be watching for a breakdown, because if you begin to see the consumer come under pressure, well then, this whole stock market is going to have a bit of explaining to do to explain why is it able to rally without the support of the consumer. And the major concern I have, and this is the reason why I even started looking at the consumer discretionary names, was the rally last week on the 10-year yield. So remember that this is a debt-driven economy, and if you have the hey Patrick, if you have the consumer, which is under pressure with rising yields now, despite the fact that you have the Federal Reserve in there, and they are bailing out the banks. They're not bailing you out. They're not going to bail me out, not yet anyway, until they're forced to. But if you see the 10-year yield, I went over this with members on the week ahead commentary. I don't want to belabor this, but if you could begin to see the yields on the 10-year move up and into the mid to high twos, you're going to see a lot of pressure on the consumer, and it's going to make it all that more difficult for the consumer discretionary names to rally. You're already seeing pressure on home builders and the home construction sector as a whole, because yields are rallying. So I went over that with numbers. I don't want to belabor that. Let's go to I don't have much in terms of headlines tonight. It's fairly a slow news weekend. I do have a couple of symbols in the forum that members wanted me to go over. NUGT, Beyond. I guess that's Beyond Meat. I've never even looked at this chart before. Cron, BE I did the other day. Let's go over Cron and Beyond Meat. But first, before we do that, let's spend a moment and talk about the futures. Now, Bitcoin popped up higher over the weekend. So I'm going to start with that chart first. Yeah. So we have a 9,000 handle on Bitcoin. Hey, hey, Terrence, blockchain. Hey, good to see you guys. Folks, if I know I haven't asked this already, if I could ask you to please hit that like button if you're watching this on YouTube, and the subscribe button. And if you click that bell button, you get notified of future commentary. And if you watch this on Twitter, if I could ask you, please share with a friend, retweet, and just follow me there. That would be great. And for whatever reason, I'm not coming up on camera. You're just getting my screen right now, but that's okay. You don't need to see my face. All right. So Bitcoin looking good here. 4-hour chart, looking good. Hitting resistance, and it's backing off a wee bit. But this has been doing nothing but gaining strength all day. I was watching it on TradingView earlier in the day, and obviously we've spiked up higher here on the futures, backed off a little bit. Not too much of a concern. I want to look at the dollar. The dollar had an outstanding week last week. We are up at current. Looks like we're going to pull back and retest this breakout point here. So the dollar, at least as we move into Monday's trade, is looking pretty good as it is holding support. We had a clean breakout on a 4-hour basis on Friday. Pullback, retest, continuation move higher in the after-hours session. Now we are up yet again. Let's take a look at gold. We had a rough week last week, and I did lighten up on our gold mining trade, and we may be forced to do so yet again this week. So members, go check out. I sent it out late today. Go check out the week ahead commentary. I talk about strategy with our NUGT trade. We are going to look to preserve profits. At current, we have gold down slightly. We are holding support here. I will be watching closely for a new weekly low on gold and the gold miners. Let's take a quick look at silver. Silver opened up lower. It is off the lows. You're seeing a little bit of an oversold condition here on silver, 4-hour chart. If you take out your crayon, just draw the peaks, and you can see that we are actually now beginning to hook up on silver. So silver on a daily and weekly basis is not looking pretty. Is it due for a short covering rally? In all probability, yes. I still think that there is further to go. I did a deep dive on our USLV position on the week ahead commentary. So members, please go check that out. I provided a support level at which we would look to entertain getting long, but I'm in no rush to do so. So silver, probably going to get a short covering rally early on this week. Patrick, I'm reading your note now. Hope we hit already. Gold up a little now. Yeah. I think we have a lot of Federal Reserve activity this week. We have the Fed heads out. Jay Powell's going to be out Thursday and Wednesday. A lot of talking heads out there. At some point in time, given the rise of the longer dated bonds at the 5-year, 10-year, 30-year bonds, I think that at some point in time, they're going to have to throw the market's a lifeline and signal that they are ready to begin buying up that debt. Even if they're not going to do so immediately, they need to send a signal. But I don't think that they want to strengthen gold and silver. I think they want to see it weak and weaker. So as long as the markets aren't pressuring them to buy longer dated maturities and support the bond market driving down yields, then they're not going to do so. Watch I went over this on the weekend commentary. Watch the construction sector. Watch for potential layoffs in the construction sector as well in the economic data, and that will be the impetus for them to begin ratcheting up the rhetoric on the inevitable, which is they're going to be buying up the kitchen sink at some point in time, including stocks. But right now they're focusing in on short-dated bonds bailing out the banks overnight, and those are only T-bills, 3-month, 2-month maturities. Let's take a look at bonds. Since we're talking about bonds, let's take a look at bonds. All right, so this is the bond price, and yet again, we are down on the session. When we close down below support, they tried to rally the 10-year note yesterday, Friday afternoon, but that rally was rejected in the end. So we're not setting up for a good Monday morning here, as we are opening up down below support. And what I'll be looking for is a break. My computer's so slow tonight. I'm sorry for the delay, folks. And you're not going to work for me, are you? This is the joy of going live. Okay, so let's annotate this. All right. So we need to hold this support level. If we fail, if we break down below this lower band of support, in all probability, we're going to make new weekly lows on the 10-year note. That will not bode well for gold and silver. So just be forewarned. As bullish as I was last Sunday night about gold and silver, they had great charts going into the week. The floor fell out on Monday morning. So I'm very, very cautious going into the new trading week. Let's take a look at the futures market. We'll begin with the Russell. We are up. This is a solid chart. It looks as though we are going to move higher here on Monday morning. Now, absent some sort of geopolitical event or some negative news out of Washington, I don't think there's anything that's going to stop this market from continuing higher. Here's the trading channel. Good support here. I'm looking for a breakout on the Russell, the NASDAQ. We're very close to a breakout. We're down slightly at current, but I think that we are going to continue higher here. You saw a nice bullish reversal bar on the 8th, on Friday. Continuation move, strong close on Friday. That sets us up for a sound Monday morning. Perhaps we'll get a pullback, but I think that that is going to be a pullback that is buyable. And we'll see higher highs on the week versus last week. The S&P 500 down slightly, flat on the session. Again, a strong close on Friday. It implies that in all probability, we are going to press higher on Monday. The only caveat I'm going to bring up here is that you're seeing a little bit of a divergence on RSI. I don't think it's a big deal because all we're doing here is we're consolidating a breakout on the S&P 500, and I think that this consolidation is simply skewing the RSI. And as long as the RSI validates the breakout, I think we're all good should we make new weekly highs on the S&P 500. Let's take a look at nat gas. Ooh, big drop, natural gas. This is interesting. Just want to take a quick look at the, yeah, this is a problem because we broke out last week. We gapped up higher and we closed above a support level. Now, granted, we also closed above the third standard deviation Bollinger Band. But the fact that we are at current trading down below the support level is a bit of a concern. So – heading into the week here, I would be very cautious. about natural gas. This could just be just a correction off of an overbought condition. No big deal. But if we close out tomorrow below this support level, that spells trouble, at least in the short term, for nat gas. Now, if we close out the week back above the support level, we're all good. It's just a consolidation of a breakout. I want to take a look at copper. Weekly basis. Copper's looking good here. And I think that we may get a breakout fairly soon on Dr. Copper. A close above 2.70, and it's off to the races for copper. Big move higher here. Weekly view. Very, very nice. Very nice chart here. Great question. Jay, if the market pulls back, shouldn't that mean gold will go up? Yes. In all probability, it will. The concern that I have is that you have, I do have thoughts on EDC. I'll go to that in a couple minutes. Definitely will for you. I think that the macro view, if you take a look at the macro view of the markets, you know, here's the NASDAQ on a weekly basis. We'll just use this as our proxy for the market. And you can see that this trend is clear, distinct, and defined. So if we get a pullback on the markets, one shouldn't expect that the markets is simply going to break and it's going to be off to the races for gold and silver, because gold and silver have taken it on the chin in a very dramatic fashion. Think about this price action last week. Let's clean this up. Okay, so here was last Sunday night. This is how we looked last Sunday night. To not love this setup going into the week would have been foolish. All right, this was a real pretty setup. Very nice. What happened? An outside reversal week. Very, very damning technical damage, and it can't be ignored. Now, so far this week, no new weekly low. So if we get a pullback on the markets, do I think that it's a good sign that we avoid putting in a new weekly low and continuing on with a move lower on gold? Yes, because gold is at an important support level. The gold miners at a critical support level. So, but to think that the rally in the stock market is over at current, and that you're going to see a resumption of the rally in gold, I think that that's not going to happen right now. I normally don't speak that way about gold and silver, but in the short term, I can't speak my book. I am concerned about the price action, and I am bullish on the markets. I have been for quite some time, even at times when we were down significantly, it looked like the market was going to fall apart. I said the market's going higher into election season, and it's done so. And hopefully we've seen the low here for gold, and we'll consolidate sideways while the market moves higher. But I'm hoping for the best, but preparing for the worst. So EDC, I know it's kind of correlated to the dollar. Yes, you're right. It is kind of correlated to the dollar. So let's move over to Trend Spider. All right, so what you're looking at here, I'm going to use these charts for a moment just to illustrate raindrop charting. Has anybody heard of raindrop charting? This is a feature on Trend Spider, and what it does, let me take this off first, and we'll just use one chart. We'll go over to raindrop charting. I'll just make it larger and I'll explain it. So this is a mixture. The raindrop charting is a mixture of VWAP, volume weighted moving averages, and candlestick charting. And the way to look at this is that on the left side of the candlestick, you see the AM, the morning price action on any given day. This is a daily chart. So this is the morning of Friday, this left side, this pregnant left side of the candlestick. The right side is your afternoon. Now, on a bullish day, you really want to see a fat, pregnant right side of the candlestick like you had back here. You had it here, although it didn't pan out the following day. And when you see purple, that's a sign of indecision. And that's what I'm going to be looking for this evening on a few charts. And in particular, let's take a look at the EDC. Now, they don't have raindrop chartings for weekly chart. So when I do my analysis, I always like to begin with the weekly view and then drill down to a daily. So the dollar had a very strong week last week. And it implies that in all probability, we are going to see higher weekly highs. It's just the way we closed out the week. I didn't expect it, to be honest with you. But with yields rising, it certainly helped the U.S. dollar. Now, the concern I have about the EDC is that all throughout last week, we opened up and then closed off the highs of the day. So it's not necessarily the price action that I really admire. Let's take a look at a weekly view. Now, we broke out 2 weeks ago, pulled back, did a retest. Last week, we launched higher, but we closed again off the highs of the week. And we closed very close to the lows of the week. So this is not a stock or an ETF in this case that I would be looking to buy. Let's drill down here. Daily chart. Let's throw up the raindrops. So you can see that on the close on Friday, you had a lot of volume into the close. So that implies that in all probability, we're going to pull back. We're going to go lower. And my guess is that we are going to fill this gap at 76.37. And at that point in time, I would look to revisit it. And I'll create an alert. Okay, so now we'll get notified. We'll keep this active for the week. And we're good to go. Now, when we drill down, on a 4-hour chart, not much happening here. They're defending the lows of Friday. I think that we're going to pull back here, especially if you get a pullback on the U.S. dollar. Meaning if we pull back on the U.S. dollar, pull back and hit support here, and the dollar continues lower, that's actually bullish for the EDC because the emerging markets are heavily indebted and they repay their debts in U.S. dollars. So with the dollar, if it weakens up, which I don't think it's going to for a while anyway, after last week's bullish price action, I would be very careful of being overly weight of emerging markets. And you want to buy at a support level, 76.37 looks to be good support. But if the dollar continues to break out here, I would be very, very cautious on being long of the emerging markets. They will trade along with the overall stock market. But at some point in time, the strength of the U.S. dollar is going to weigh on that sector. So just be careful. Let's take a look at Beyond Meat. All right, not much data on a weekly basis here. Obviously, it just IPO'd not too long ago. Daily chart. All right, so nothing to love here. I think that what is optimistic is that what you're seeing here are higher lows being put in on. I'm just noticing now that I zoomed in. There is something nice about Beyond Meat. We broke out on Friday. I didn't see this candlestick. I was looking at this candlestick, assuming that was Friday. All right, so we're seeing higher lows here on RSI. Now it all makes sense because we broke out on price. So interesting. We broke out on RSI, validating, and we broke out on RSI before we broke out on price. So you had an indicator leading price performance, and we broke out on a daily basis. I like the chart. I like the way it's setting up. Stokes are beginning to hook up. Let's go to a 4-hour chart. Nice. So 4-hour chart looking strong. I think that the risk reward is favorable in that if you decide to open up a position here, use a stop right below last week's lows. Stay small. With the initial, you get taken out. You keep your loss small. Add on a breakout above this upper band of resistance here, which is declining, subject to change. But at current, it's at about, let's say, $86 per share. So Beyond Meat looking pretty good. Kronos Group. Let's go to a weekly chart. Nice weekly consolidation going on here. We broke out 2 weeks ago, 3 weeks ago, pulled back, did a retest 2 weeks ago, last week, an inside week. I think that we're probably going to make a run here on Kronos to the upside and to challenge this upper band of resistance. RSI putting in higher lows. And RSI has broken out. I think that we'll probably break out or attempt to break out this coming week. Daily chart. Daily chart looking sound. An outside reversal day on Friday. Very pretty chart. So what I would be looking for here to get long is a new weekly high. Let's and all right. I always need to make a note to myself. So we have a alerts set. So I'll be looking to buy Kronos on a breakout above this upper band of resistance here. I like the chart. I think it's setting up very, very nicely. Let's take a look at it on the raindrop charts. Good close here. See how we had that fat, pregnant candlestick on the right side? That implies that you had buyers moving in at the close. Very, very attractive setup moving into the new trading week. 4-hour chart. Very nice. Very nice setup here. So Kronos looking sharp. Now, LABU looking good. I discussed the weekly chart on the week ahead commentary. So go check that out, members. LABU is on our hot list for the new trading week. A very powerful week last week. I like healthcare going into this week. I like the biotechs going into this week. Now, NVIDIA we've been watching. And what I like here is that you have this purple candlestick. It's like a doji star formation, sign of indecision. Hey, blockchain. if the dollar is breaking out, that should put some pressure on BTC as well, correct? All right. A good question. It's funny you just asked that. Wow. Let's wrap up with NVIDIA, and I'll show you what I was working on earlier. NVIDIA, trading sideways. I think we break out here fairly soon on NVIDIA. Not loving the daily chart of NVIDIA, to be honest with you. The 4-hour chart is a lot nicer. So I need to see a breakout on a daily basis on NVIDIA. Now, I'll show you what I was working on earlier regarding Bitcoin. And I was looking at, I don't know whether I saved it, because I was looking for correlations between yields and Bitcoin. I'm going to see if I can find this chart. Forget it. Let's just do a new one. Bitcoin. I want US dollar. Okay, that's right. All right, so this is not reflective, or is it? It is reflecting current price action. All right, good. All right, so what I want to do here is, this is the way I usually do it. To answer your question, blockchain, we'll go with yours first, and I'm going to add a couple of overlays here. And there is some correlation. I did the 10-year yield earlier, and I did a correlation of gold as well. So we'll bring up the Dixie. So here's our overlay of the dollar relative to Bitcoin. Now, this is a very noisy chart, but the only reason why I bring up a daily chart is because sometimes you get short-term divergences, and I wanted to get a feel for what type of correlation, if any, we have. Is it inverse? Is it correlated? So at current, you have the dollar strong. Bitcoin has been weak of late. Totally inverted correlation here. Let's pull back now, clean this up, remove the noise, monthly view. Here, you had an inverse correlation. Bitcoin was pulling back with the dollar stronger. Here, you had a correlation with Bitcoin rallying along with the US dollar. They pulled back here. So, I can't say with any confidence that there is an inverse correlation. I don't think it really matters all that much, to be honest with you, looking at this chart. I mean, the dollar was strong here. Bitcoin was weak. And there's not a ton of data here. We rallied here. So going with the most recent data, it looks as though they are rallying or performing in tandem. So I don't think that there's much in terms of an argument that could be made for a inverse correlation of the US dollar and Bitcoin. Does that answer your question a little bit anyway? It's a good question. I always like to look at correlations. Now, what I was looking at earlier was gold versus Bitcoin. And you can see there's a bit more of a correlation with Bitcoin and gold. And I was kind of surprised with the correlation that you see. And what's strange is that, you know, you throw up the US dollar, because normally gold and the US dollar trade inversely of one another. It's just like an odd. I screwed up. Behind. And so you can see here, a good part of 2019, you've seen gold and the US dollar trade in tandem. Why? The reason is because you had so much geopolitical risk out there. You had false flag events occurring over in the Persian Gulf. You had Brexit. You had the October 31st deadline, which never occurred. You're probably never going to see a Brexit. Now they're going to have elections, and the geopolitical risk was taken off the table, and then you saw the resumption of the inverse correlation between gold and the US dollar. But generally, the dollar and gold trade inversely of one another, but a far more correlated pairs trade is gold and Bitcoin, oddly enough. Yeah, appropriately said, odd times, no doubt about it. Let's just check out Zero Hedge really quick. I just want to see whether or not we have any headlines. Slow, very, very slow news day. Nothing worthy of talking about here. All right, folks, with that, let's just do a quick run through of how we're closing out the program on the futures. Gold still down. Let's use an hourly chart. Interesting here. We may be setting up here for a bit of a rally on gold, maybe. This is only a 1 hour chart. I am not a day trader. And that's not a knock on day traders. There are some very, very good day traders out there. But with the advent of high-frequency trading, it's not my game. More of a long-term player, more of a swing trader. Short-term, long-term. All right, so gold looking pretty good here. Although we're down, we are off the session lows, and we're seeing a positive divergence of a positive divergence of RSI moving higher. So we're putting in higher lows. What we need to see now is a higher high versus Friday's high. So gold is actually looking pretty good. Although we're down at current, it's not looking bad. Let's stick with the 1 hour chart for a moment, and we'll take a look at the dollar. The dollar's weakened up a little bit. It's still up on the session. That could be helping the bid for gold. Checking out silver. Silver, very similar to gold in that we are seeing higher lows. With RSI validating the move higher. So we have RSI, which is breaking out with higher lows and higher highs. Yet no breakout yet on silver. 1 hour basis looking pretty good. Colton, hey, how you doing? Terms of service, very complex. It's good to have Thinkorswim for paper trading. It's very, very helpful. Let's take a look at the Russell futures. A little bit of weakness here. We're still up on the session. So light volume right now. And it's really not worth wasting everybody's time going to all of these charts on a 1 hour basis. We're pulling back off the highs on the NASDAQ. Don't forget, folks, we've come a long way. And this is what I really want to see. This is the most important chart to me, is I need to see yields pull back, and I need to see a rally on the 10-year Treasury note. It is complex, but they have a very, very good help center, a lot of video tutorials. So the 10-year yield, while down on the session, is looking okay. I think that we may, in fact, rally into Monday morning on gold, silver, and the 10-year bond. And with that, I'm going to leave off with Bitcoin, because I can just do this all night long, to be honest with you. I probably will. All right, so we're off the highs of the session on Bitcoin. We're still above the 9,000 mark. And that is it for tonight, folks. Members, I'll be in contact tomorrow morning, bright and early. Everybody have a really great remainder of your Sunday. Thanks for joining in on the Sunday night. And I wish I could have been a little bit more jovial, but I had oral surgery yesterday, and I'm completely knocked out. So thanks for joining in. Please hit that like button, subscribe button, and whatnot. And if you have any questions, please drop me an email. Members, leave a note in the forum, and I will talk to you soon. Have a great night, all. Be well. Keep it up, Colton. Good for you, brother.